All right, everyone. Happy Friday. Happy Friday. Here we are again for another episode of Just Shilling. So thankful and grateful to have all of you here today. We have another incredible guest in Marc. So I want to just say some quick intros to folks coming into the room on this beautiful day. We have Sergey, Lourdes, Mike, Zachary, everyone coming in. Thank you, Alexander. Thank you so much for coming in today. And wanted just to kind of get some quick house rules, folks, for those that may be new here. This is a safe space. There are no silly questions. Please do feel free to join into the conversation that we're having today when we get to the halfway mark for some Q&A. But everything that we discuss here, there's nothing that's ever going to be directly related to financial advice. The opinions that are shared are of the guests and my own and do not necessarily reflect our organizations. And if it's anything that's probably a little bit too controversial for like a family dinner, we want to kind of keep it PC here, but we do obviously want to keep it fun and bring in a little bit of spiciness here as well too, because we're all adults. So without further ado, I just wanted to welcome to you today Marc. And Marc, tell us a little bit about who you are and give us that 30-second minute elevator pitch, and we're going to get right into the conversation.
Sure. And Trevor, thanks for having me. Really, I never thought I'd be here today trying to build a product in such a niche market. I always wanted to be a basketball player, and that's really all I did growing up until I moved to the US. I'm actually doing this venture just so I can own the Boston Celtics one day. So, when I got here to the US, I realized it's a bit more expensive than I thought. So I was always looking for ways to generate some income without wasting too much of my time. And that's really when I fell in love with trading stocks around 9 years ago. And that was the beginning of my journey in finance, right? 5 years later, I found myself working for a small local PE fund in LA as an analyst. And we had a thesis that, hey, let's find a really good technology that's not being used in the right way, and let's combine it with commoditized middle market company, and that will benefit from the technology. So that's really been the thesis behind my career so far, and more than happy to introduce Damoros and what we've been working on.
Yeah, absolutely. Now, tell us a little bit about what really inspired you to start Damoros and your journey into transforming luxury watches into digital assets. And, I know you're going to kind of talk about that, but we're going to kind of even go back and, during this conversation, uncover really just the overall huge market within luxury watches. People may not even be aware that this is such a, unique marketplace. So elaborate a little bit on that for us.
Yeah. So the transition from finance to tech happened around 6 years ago. I met an angel investor in Irvine, and she encouraged me, hey, maybe you should pivot to the operational side of things. And so I joined a small company named RDS, and we automated research and development tax credits. So very boring things, but we did solve a small issue for a larger company in Gusto. And so they acquired us back in 2021, right? Ever since, for the past 5 years, ever since moving to Irvine, I've been flipping watches, and that's actually how I paid my tuition for grad school at UC Irvine. And so the story sounds great so far, and this is because it's really the feel-good version. In reality, in the past few years, my family, all my childhood friends, and their families, we all went through one of the biggest Ponzi schemes in history. Really one that makes Bernie Madoff look like a saint. And that scheme was perpetrated by the Lebanese government and its central bank. So simply, we all just woke up one day and all the money in our bank accounts just disappeared. And never to this day has been recovered, right? So it's a bit crazy. We became a country that was asset rich, but really cash poor. And that's really when I realized the power of people coming together when governments and big entities fail. So the only way for people back then to access funds were through these shark-like private lenders. And these lenders would only provide you a loan if a certain collateral was involved. So a couple of my buddies and I, we pooled everything we had collected over the years. We sent them over to our friends and family, and they used these watches to secure loans. Now, be it they were at crazy interest rates, but they were able to survive. And so at first I thought, hey, I think we just invented the wheel, guys. then I actually researched the market here in the US, and it's crazy. There's hundreds of millions of luxury asset-backed loans every year. And right, so the idea came, let's build a platform that facilitates these transactions. So it's not like we're here to create a market. We're simply just making it more efficient. We're making it cheaper for everyone involved. And then we're adding a few extra solutions to take it to the next level. And so I know this is a blockchain-based podcast, but really we had this whole business planned before thinking of blockchain. And it just happened to be, as we dove into this technology, it was really amazing for our use case.
I love that because, a lot of traditional organizations and industries that may not typically people think of when it comes to blockchain, I think that there is this way that it can overlap and that they can it can benefit what's been done originally. So, you were just mentioning that luxury watches are often an overlooked kind of like financial assets. So, what do you think are some of the biggest misconceptions about them? And help us understand a little bit more about this market and like the volume and just kind of the true magnitude of it all.
Sure. Yeah. And you are right that this is our thesis, luxury assets, specifically watches. This is what we're starting with. They do share very similar investment characteristics to the more used asset classes. So we're talking equities, real estate, gold, other commodities. Risk return wise, over the past 40 years, they've actually performed better than the assets I mentioned, minus equities. We don't think collectibles are the perfect asset class, but they can definitely help you diversify your portfolio. And when we talk about financial assets, so let's take a house as an example. I can take a loan against my house, I can sell it, or I can rent it out, right, for some passive income. And that's really what you can do with the financial assets. So why are watches different? Really because they just lack the appropriate infrastructure. And for us to be able to prove our thesis, it's on us to build the right solutions to add things like liquidity or scalable collateral solutions, right? And to transform them into these cash flow generating assets. The market we're looking at, really, I would say the best comparable is pawn shops. So they trade and they lend against the collectibles asset class. In the US, there's around 12,000 pawn shops. We're averaging out anywhere between 500,000 to 1 million in sales generated per pawn shop. So it's quite a big market we're looking at. It's a $10 billion market at least. And one thing I just wanted to add about this asset class, that it is literally the least volatile out of all the assets mentioned. So a misconception because of that could be that, hey, they're always great investments. Reality is, just like any other asset class, some are and some really are not. So there's nothing guaranteed in this industry, but we're trying to create an equal playing field for everyone involved, especially the beginners in this industry, because they will learn and they will improve while growing with us, and they're an important segment for us.
That's fantastic. Now, with like traditional lending markets, it's typically, I'm assuming, very time consuming, right? And when you're trying to even secure a loan against an asset like a luxury watch, right? Like, how does your platform really kind of help streamline this process, not only for the borrower, but for lenders as well, too?
Sure. Just for anyone who isn't really has been interested in the lending space, it's very easy to understand. You're compensated for taking a risk as a lender, and that risk is usually quantified in the form of an interest rate. Usually there's a bank in the middle, and banks are really good at not losing money. So we see lower interest rates. Now, when we do dive into peer-to-peer, we're removing this sophisticated middleman, this bank, and we find a premature market. Now, it is premature, but it's well-funded. There's hundreds of billions funded, but at really crazy interest rates, and that's because of a 20 to 30% default rate. When I talk about Damoros' process, I like to use analogies, especially when I
love analogies. Break it down.
Trevor, especially when I explain it to my mom. I think I've explained it a few times, and but let's think of Damoros as DoorDash. DoorDash is a company I love. And let's take a local pawn shop as a restaurant. So today, you can go to the restaurant's website or you can order through the DoorDash app. Uh, because DoorDash will send you a driver to pick up the food, and because they attracted a new buyer like myself who probably didn't know your restaurant existed, then they're going to generate a fee off of that, and maybe the restaurant gives me a discount at the same time. What I'm trying to say is we're not here to take away any business from pawn shops, but we're here to broaden their target audience and save them a lot of money and resources when it comes to the handling of this collateral and valuing it and authenticating it. Right? Um, they provide really high interest rates, and I'm not saying they're the bad guys here. They have a decent amount of overhead, so it's understandable. They have to take the watch to an expert, probably buy insurance on it, store it for a long time, and constantly follow up with the borrower, for payments. And then let's say it goes through default, they have to spend some additional resources to liquidate the collateral, right? So if I come to you and I tell you, hey, we're solving all of this for you, all of this is being handled, all you have to do is lend and collect, then we expect you to become a bit less predatory in your terms. And if you don't, others will come in and take your place in this industry.
Now, one of the things too, and when it comes back to the importance and the power of blockchain, I know that a lot of the things that we talked about within any industry, right, is having trust and transparency. So help me understand how this platform is going to help with increasing trust and transparency in the transactions, and maybe even give us an example of like an average transaction or something from like the beginning to the end from the consumer standpoint.
Sure. Okay, so there's a lot of risk in this industry, and we all understand that sometimes it takes one bad experience for a participant to lose interest in an idea or a market. It's pretty sensitive. We have a big risk on the asset side, right? It's a valuable item. So every watch that's listed on our platform first goes through a rigorous authentication process. The process is documented, so the authentication is streamed, and the results are displayed for everyone involved. So now we have assurance that, hey, this watch is authentic, but it's also insured. So if it's ever lost or damaged while it's in our authenticator's possession, that's on us, and we'll get you the money you need. And we'll give you your money back, but we'll also put in the effort to find you a similar watch. Because the thing about this industry is you could have the cash sometimes. It's just really difficult to find a particular model you're looking at. We're also going to be sending independent auditors at least once a month to ensure that the asset is being vaulted, it's not damaged, and everything looks good. Now, the best thing about blockchain, and I think it just goes over our head these days, we don't talk about it, is it's literally a ledger with data on it that no one, including us at Damoros, can ever undo. So we want to take advantage of that. We want to build analytical tools that trace these transactions, that can estimate what this watch has been sold at in the past 12 months, and provide that data to our customers to help them make some more informed decisions. On the lending side, we have some really good smart contracts. The loan terms are all automatically enforced by these contracts, and we don't have any hidden fees, right? So all parties involved have a mutual understanding of the terms, and there's really no hidden clauses.
That's awesome, man. Thank you for sharing that. And one of the other things I wanted to kind of transition as well too, because this opens up to maybe even potential fractional ownership, right? And then, even more interesting is that we were chatting about the potential for like a rental program on this platform. So, how do you really kind of see this feature enhancing the user experience, and some other ways that maybe blockchain technology are going to play in the future of just not only, luxury assets, but, all kind of asset trading?
Okay. Okay, just a heads up, Trevor, the rental feature is a controversial one in this industry.
And tell us why.
Yeah, yeah. So we're in a market that thinks, why would you wear a watch if you can't afford one, right? This is the thought process here, and so I understand that, but I love this feature, and we're going to make that happen. But we're approaching it a bit differently. So today, you can go rent a watch, um, but it's a pretty expensive process. So let's take a 10K watch as an example. It's going to cost you 3 to 500 a day. So over a weekend, if you have an event like a wedding or a graduation, you're looking at least a grand. And so a grand out of 10 grand, that's 10% of the watch's market value. That's pretty expensive. You compare that to $1 million house in LA, right? That's actually a small house in LA, but you can rent it out for half the price of a 10K watch. So something doesn't sit right here. In the past, we've seen companies try to do rental membership programs, and it actually went really well. I'm talking about a company, 11 James. They did well, but the company's investors realized that they really took out a crazy amount of debt to buy the watches and then rent them out. So they were over leveraged, right? So we're firm believers of providing the platform, not the asset itself. We don't like cash intensive businesses. So even renting for us is done peer to peer. The second thing is that you're only allowed to rent a watch that's comparable in value to the watch you have vaulted with us. So in a sense, it's watch rentals for watch owners, and that way, if you do damage a watch while you're renting it out, whether it's a significant damage or a small damage, through tokenization, we can offset the damage using your staked token. So it kind of works like insurance. So going back to our example of $300 a day, we'll cap it at 0.5% of its value per day. So 10K watch, we're looking at $50 per day instead of that 3 to 500. And keep in mind that, the bulk of that 50 goes to the person that owns the watch being rented, right? It is peer to peer. So this is what we mean when we say we're transforming this asset class into a cash flow generating asset.
Yeah, that's fantastic. And I think that, this type of model and, we had also chatted about maybe even you expanding into other collectibles markets beyond watches. And I see the use case for that. So I don't know if it's a little bit too early, but, are you thinking about any other types of collectibles that you see as potential opportunities and why?
All right, that's a good question. So I'm a fan of art. I think it really fits our use case in the sense that it can be passed down generations down the line, right? I'm also a fan of trading cards. So as an example, a colleague of mine gifted me a Jason Tatum rookie card a
Nice.
couple years ago. And so I know that card's going to appreciate. I mean, Jason Tatum is probably the best, not one of the best players in the NBA right now. Uh, but really what's next for us is luxury handbags because of the synergies they have with the watch market. So we've noticed a lot of these authenticators that are experts in watches are also experts in handbags. So it's going to cost us less to expand into that segment of the collectibles market. And it's almost as big as the watch market. So there's around 25 to $30 billion in secondhand sales in handbags per year. So together, their watches and handbags are almost as big as art. Art is super interesting. I just don't know much about it. So if we were to go that path, we definitely need to hire an expert first.
Yeah, it's really interesting as well too, because blockchain and other technology within the space, it's going to really help with that authentication, right? And in any kind of luxury industry, there's obviously a lot of counterfeits and things like that. But with the right technology, I think that it's going to really eliminate that and open the door up for people that truly do own the asset. And one of the other things that we talked about, right, we're talking about like luxury goods, right? And a lot of people going up and down, socioeconomical things that are going on, people are inflation, etc., right? There's a lot of tough economic times that people are experiencing. So, can you help understand or talk maybe a little bit more about the relationship or how, luxury goods are actually empowering certain people during, economic tough times? And you had talked a little bit about the example back, what you were dealing with in your family in Lebanon, but can you even elaborate a little bit more on that and just kind of maybe the misconceptions people have about luxury goods and how they perform during, certain times?
Sure. Okay. I think we spoke about this, but I'm a firm believer that sustainable success means during the bad times, you figure out a way to improve from that, right? So I always like to think about black swan events in any personal act I do or in any business venture I'm trying to pursue. So in our case, we're focused on the lending market, right? A black swan event could be in the form of, big entities, corporations, or even governments defaulting on their bonds, right? And that could cause a snowball effect. And the lending market is one of those markets that once it happens, we're going to look at each other and say, hey, we saw it coming, but we're only good at calling things after they do happen.
Yeah.
Now, when they do happen, we can expect that to become much harder to find, at least at reasonable terms. That's what happened in Lebanon, and no one will really give out a loan unless it is secured, right? So the goal is during these times, we've seen over the past 40 years that assets hold their value. The first thing that loses its value is cash, right? I'm not saying in terms of a black swan event we're going back to the barter economy, but there's definitely some benefits for having an asset on hand, whether it's physical or intangible, digital. In our case, it's both. We want the asset itself to appreciate. We also want the token itself to appreciate. And so that's something else we're working on today. Trevor, how do you think the token value should react in terms of asset value? Like, do you think a token should be as valuable as the asset itself, more or less? So these are things we're thinking about every day and working on solutions to figure that out.
I love it. I love it. Now, let's bring it to more about the organization, right? And some of the partnerships that you've been able to embark on. There's some interesting ones, and you're obviously on multiple protocols right now. So help us understand a little bit more about like those partnerships that you've been able to create, the success that you're already experiencing from that, and then let's talk a little bit about long-term partnerships and what are some of the kind of qualities that you are looking for in not only like investors but like collaborators to really ensure that there's mutual growth.
Sure. So the biggest thing I've learned from this market is, okay, sometimes you'll find a great deal, you'll experience a crazy return from it, but the bulk of the revenue lies in your ability to really flip these watches as quickly as possible for a small margin. And to consistently do that, I would say that's a good recipe for success. So we're talking about, we want to sell asset A, get the cash proceeds instantly so we can go ahead and buy asset B and do it all over again. This is the flipping market that we're in watches. And so this is where we first thought, okay, crypto makes sense here because of that instant settlement feature. Right. But we're also in a market where we can't really isolate our audience to crypto enthusiasts only. So we've collaborated with platforms like Crossmint. I know you had Ken on the show earlier. He's a great guy, and
he's awesome.
He's an awesome guy. We're also working with Bridge, and so what we're trying to do is just make it easier to off-ramp crypto, right? So some of our users might ask for loans or payments in euros or dollars or whatever it may be. Then having a Crossmint or a Bridge with you is really important. In terms of collaborators, our business model is based on the fact that in every big city, we need someone who's gonna receive the asset, store it, value it, and keep it stored for a significant amount of time in some cases. So we're looking to expand internationally to places like London, Hong Kong, Dubai. These are all big markets. So any intros there, I'd appreciate. I'll be in Dubai in December. Domestically, we're really interested in New York, so I'll be in New York next week, looking for partners. Investor-wise, so far we've been able to build our MVP, our mini MVP, I would say, bootstrapped. We've gotten some help from friends and family, but I don't think we have reached that inflection point where we want to go out to fund and ask for money. Not at least as we gain more revenue and gain some more traction, so we have some leverage in negotiations. But I'd really like to be in a place where I'm not trying to convince an investor of the market and whether it exists or how big it is, or if blockchain is going to help here. I'd like to be more interested in convincing them that, hey, we're a team that can deliver on our promise. So ideally, I'd like to work with an investor who's aware of how the solutions we're building actually affects the luxury assets market.
Yeah.
Because I believe they're going to appreciate what we're doing a bit more.
Fantastic. And also too, some of the protocols, and I just wanted to share this with the audience that may not know, but it's like I believe Ethereum, Optimism, Polygon, Solana. Are there any other plans to kind of expand a little bit more?
Yeah. So for now, we're really flexible with any blockchain we use because all we're doing is minting an NFT. So it isn't really as complicated. We can do it on all the chains you mentioned. We've been talking to Say about a couple things as well. Blockchain wise, I think it's when we transition, and the biggest reason why we're using blockchain is to lend against a pool of funds, right? So real liquidity is when I can just press one button and get the loan for the watch by lending against a protocol or a pool of funds. So once we get to that level, we'll just have to see which chains make the most sense for that activity.
Yeah. And this is also really interesting because NFTs, traditionally kind of got a bad rap, a few years ago, and it kind of went through its own cycle. But obviously, this is a different use case for NFTs, right? So, do you think that overall in the future, right, this type of use case for NFTs is going to become something more commonplace?
I mean, I hope so. Yeah. So I think, at least to my understanding, there's a couple really interesting use cases with NFTs. One is when they're backed by physical assets. This is the market we're in. I think building a community is also interesting. I just think that NFTs in the past couple of years, more than a couple of years, got super inflated, and then a lot of people just were left, holding the bag, and that really discouraged a lot of people from this industry. But like anytime there's tech innovation, it falls in the hands of some bad actors, but they tend to funnel down with time. So I think NFTs are going to make a comeback, and the public will slowly be aware of their real benefits, and we should have an exciting couple years coming up.
Yeah, for sure, for sure. So, this kind of brings us to the halfway mark. Tell you this conversation would go by fast. It's really been enjoyable so far, and I've been learning a lot. So, folks, if you are in the audience and you do want to ask a question pertaining to what we've been chatting about so far, please raise your hand. We'll do our best to bring you up. But in the meantime, I did just kind of want to chat with you and learn more, Marc, about maybe a memorable moment in your journey, forming this organization that, reflects the impact that you want to truly have on the industry. So talk a little bit about that, kind of short-term and long-term, what your goals are.
Sure. Okay. So when we first met with our partner here in LA, so our authenticator, he's got a few big vaults, and I've known him because he always has some nice pieces on hand. But anyway, when I explained the business model to him and how he's going to generate money, and it's just a percentage off of our fee, and his only expense is the insured vault itself, he looked at me and he asked me, okay, so what's the catch, right? You're telling me I'm just going to make money and I have nothing else to worry about. You have a few things to worry about, the authentication process itself, but there's really no catch. Our product benefits, or at least we're trying to benefit everyone involved, right? I think a few industries have built or will build products that benefit the majority of the market participants, and that's how a market tends to grow usually. There's just a lot of money to be made here, and what I want to prove is that in this industry, watches, because of our obsession with watches, because we really do love this asset, we can make it a beautiful market, and we can make the pie bigger for everyone involved, and we can all appreciate it.
Yeah, giving access to, people that maybe traditionally didn't have that access to it. And, one of the other things that we were talking about was kind of like this fractional ownership, right? And being able to use blockchain and the technology to maybe even, open the door for that as an option. But with that, and this is something that we chatted about because this is obviously top of mind awareness, right? Is that when you're trying to do that, then you have to kind of think about, regulation and overall market acceptance. So what's your experience so far when it comes to regulation? And as this type of product and your company develops and you're able to kind of really expand to other things, how are you anticipating, regulatory scrutiny, or even being able to, have more conversations with those types of individuals?
Sure. And Trevor, I'd like to just briefly touch on the concept of fractionalization, just because I think it's a
Of course,
really
absolutely, yeah.
important part of our business. Um, so most of the people we bring into this market aren't going to be new to this market. I doubt we're going to get people not interested in luxury watches to be interested just because it's in blockchain. But there's this one segment that I think we're both talking about, a new segment of users that we can bring to this market. And it's low budget investors. And by low budget, I mean anyone who can't afford $1 million watch. And that includes me and almost any other collector I know. So, you take any industry, and it's often you invest in the largest companies in the world, and you're probably going to make a better return than investing in the smaller ones. So I take my favorite watch as an example. It's a rose gold Audemars Piguet. It's a six-figure watch that I can't afford, but I would like to invest in it because I'm speculating that, hey, this watch is going to appreciate, and I'd like to appreciate with it. So there are watches that are seven-figure watches. Some are eight-figure watches. If I can today invest in a trillion-dollar company like Google, then I should be able to invest in $1 million watch. So fractional sales are really interesting because that's a whole new target audience we're introducing. If you take a look at its stock, when it goes through a stock split, its shares actually tend to go up, even though intrinsically it shouldn't. The market cap didn't change, but because of this perception that, hey, I can buy this stock for $100 now instead of $1,000, you tend to see the markets move it up with time. So my prediction is once we can fractionalize these high luxury watches, then we might also be able to help the watches itself to appreciate in value. In terms of regulations, so I met this really, really bright individual at an event in Santa Monica. I was there. I didn't want to be there, and I think he could tell. So he approached me, and we just small talked about stuff like drones, nuclear, whatever. And then we stumbled on Damoros and blockchain. And he told me that, hey, like, if you're going to be successful in this business, what's going to separate you and others is how you deal with the regulations, because there are going to be a lot of eyes on us. And especially with fractionalization, now we're talking about securities. So now we're talking about the SEC, three very dangerous letters. So we've gotten some legal advice, and as we raise funds and can get even more legal advice and start building this fractional ownership feature, that's definitely something we're going to need to keep our eyes out on.
Hey, for the folks that are listening or in the audience, if you have that kind of compliance regulatory mindset, reach out. Let's collaborate and help everyone kind of move this along in the right direction. I'm sure as you grow, there's going to be the need for having these individuals in your network. So I would love to be able to organically have that happen here. As we kind of wrap up here and kind of shift more into kind of the fun conversation here, not that this hasn't been fun, but maybe even some more funner type of things that we can chat about, is what advice would you give to aspiring entrepreneurs looking to enter, like, maybe even not even the luxury goods, but the technology space in general, from what you've been able to learn?
Sure. So, okay. I think if you're interested in luxury goods on a standalone basis, and you're in it for the fast money, then it's a great industry to be in, as a merchant, as someone flipping these assets. Now, if you're looking to merge technology with this idea of luxury assets, or with anything really, I would recommend you start saving some money right now, because when you quit your job, it's going to evaporate quicker than you think. And if you have family to take care of, or an expensive mortgage, or really you like to consume everything around you, then it's really tough to build in tech, because you have to be prepared to live under your means for a while. So that's my advice. But again, if you like an idea, you don't have any money saved, and you don't have someone supporting you, but you're really obsessed with what you're building, then just do it, and it will all work itself out. Whether you succeed or you fail, it doesn't matter. When you're obsessed, you're going to figure out what the next venture is, or how you can improve. And I will say, Trevor, I'm still very early on in this journey. So I wish I had better advice to give. I'm actually open to advice if anyone wants to give me some.
Well, I love that what you said, but I think the hardest part is just starting, right? A lot of folks, they have, a lot of like mental walls that they put up in terms of their capabilities and their abilities to achieve their dreams and goals. But I think that once you start it, that's usually the hardest part, and the consistency of it, right? So I mean, you're doing that, and this is awesome. I love it. And we're always going to be here to support you any way that we possibly can in the community. So we do have a question in the audience. I'm going to bring this person up here. You are here, and you have been part of several of these conversations. So super excited to see what you have for a question for Marc today.
Please, no tough questions.
Yes, thanks, Trevor. I just wanted to ask Marc really quick. Actually, I wanted to tell him that, great idea, very good use case. If he had considered, I was hearing the smart contract part, if he's considered self-repaying loans instead as a smart contract for his customers.
If I say yes, I'd be lying to you. I haven't, but I would really love to learn more what you think about it and how we can implement it in our product.
Yeah, because you were mentioning the loan part, and I would think it'd be better for your customers to reach the goal that you're trying to achieve for them as a self-repaying loan, where you have a liquidity token being your own token that's minted from your own contract through your customers' NFTs. And then in that case, you would basically a deflationary, inflationary token ecosystem inside your own platform.
It's a possibility. If we were to go that route, I would definitely need some help. I think to get there, one thing we're focused on is we're trying to figure out what the optimal loan to value ratio should be per model, right? So that's going to help us create a pool, and then automatically borrowing against the pool. Once I can tell you this model should be given at exactly 60% of its value as a loan, for the lenders not to lose money, or for the protocol to generate this X% in return. So I'm definitely open to ideas, and if we can chat offline, that I'd super appreciate that.
Yes, love that.
Sure.
Love that. Look at that coming together right here. And that's awesome. Do you have any other questions?
Actually, I just had one more thing. You should really look into proof of reserves and CCIP for your attestation of your value of your products. And then that would be interoperable, where you're able to just cross-chain between bridges and allowing you to use any type of blockchain to run your platform on, as well as integrating a self-repaying loan system. But yeah, if you'd like, go ahead, send me a connect, and then I'll connect with you whenever you want to have a conversation. That'd be, appreciate it.
Well, I would love that. Thank you.
I love that. Fantastic. Thank you so much, Tolink, for coming back up and asking a great conversation and being a part of these conversations on a regular basis. So, wanted to shift a little bit more into kind of where the future is, right? And I know that you were talking about this, but, what's the best way? Anything else kind of coming up on the roadmap? Any other events that you have in mind and stuff that people should be kind of paying attention to kind of near term right now, Mark?
Yeah. So we're testing our MVP right now with a set of lenders and borrowers, and it's great because we're learning how quick we need to be in revamping or adding additional solutions to our product. I will say it will be ready for everyone to use. At least the lending aspect of it will be in the next few weeks. We have a deadline on November 21st. That happens to be when we'll all be in Vegas for F1 weekend, and we're going to celebrate our launch. So that's our next milestone. Then we're going to focus on building a suitable marketplace, because at the end of the day, this collateral, we need to create an efficient way for the lenders to be able to liquidate it in case of a default. So next up is going to be our marketplace.
Love that. And the best way that folks should stay in touch and follow kind of what you got going on, and if they are looking to collaborate or be of value, or just to kind of chat and learn a little bit more about this industry and the technology and what you're building, how can they do that?
I should probably have a presence on like X and Discord, but for now, the best way to reach me is through LinkedIn or an email. My email is Marc, MARC @damoros.com. So it should be easy to memorize. But yeah, I'm happy to talk to anyone, and LinkedIn is the best medium for that.
Awesome. All right. Well, let's get into some fun stuff here. I like to do a little segment called Bearish or Bullish, and we will close it out on that, and maybe even talk about some other cool things that you're interested in that folks might not know at face value. I know you're a big basketball fan, and we're going to have to definitely get you out to Boston and go to a game together. But in terms of obviously kind of what all started it, right, when it comes to the crypto industry, Bitcoin, talk to me a little bit about that. Are you bearish or bullish, and tell me why?
I'm extremely super bullish on Bitcoin. I just wish I was 10 years older and I understood the concept of Bitcoin a bit earlier.
Well, why do you love it so much?
Because I understand it. I think it's one of the few tokenomics that I do understand, and so I think we have a interesting future with Bitcoin. I think an inflection point could happen if we see the US dollar depreciate and lose its value, and now we're running around thinking, what is a US dollar? And we're thinking of what should it be backed with. It was backed by gold at one point. Is it going to be backed by Bitcoin? I think the biggest companies in the world are hedging for that. Most of the Bitcoin is now owned by these big, large institutional funds. So they know better than me, and that's a good sign that we're going in the right direction. I do see my older brother listening to us right now. He actually told me to buy some Bitcoin back in the day, and I didn't listen to him. That's a while back. So I should have listened to him, but super bullish on Bitcoin.
I know, that's awesome. That's awesome. Fiat and just in general, right? I think that it's really going to be interesting as digital assets continue to evolve and these large institutions come in, and really, really exciting times, where kind of a very generational moment when it comes to all of that. Let's talk kind of about something else, right, too, because I know that when, in forms of payment, this is something that you're going to have to experience, when it comes to, USDC or any other kind of stable coins. So stable coins, bearish or bullish, and why?
Super bullish, as long as nothing shady is happening on the back end.
And what do you mean by shady?
So like if you're able to equate your stable coin to $1, like an actual dollar that and that's the real dollar. So that includes inflation, whether you're using treasury bills on the back end or whatever protocols you've created to replicate a dollar. I'm not sure. As long as nothing shady is happening there, then as long as a stable coin is worth $1, uh, obviously the cross-border use case is the biggest in all of blockchain right now. And yeah, I mean, it's incredible. That's where the real money is right now, stable coins.
Absolutely true for sure. And you told us that you were growing up, you were really into basketball and you're obviously a Celtics fan. Is there anything else unique or interesting about you that our audience might not know that you want to share?
Other than being the biggest Celtics fan in LA,
What's that like? I mean, being in LA, and maybe even just talk a little bit about that, and even more so, in all seriousness, it's like the community, right? What's it like? Because I know that we're trying to do some really cool things, and I think a lot of cities out there are really trying to push for wherever they are to be a hub when it comes to this technology. So, talk a little bit about like what's the ecosystem, like the community out in LA, and what's the kind of vibe? I mean, are people super psyched about this technology, or do you see it kind of being a buzzing atmosphere, or maybe not so much?
yeah. So I think LA has an incredible community. My community specifically is not as related into blockchain, so I'm just starting to introduce myself to that ecosystem. My advisors, my mentors are in tech, not really in blockchain, so I'm really explaining that use case to them. But then going back to sports, Trevor, every place I play basketball in Los Angeles, I have a Celtics jersey on or a Tatum t-shirt on, and it just makes me more excited to play. But I know Boston has a really interesting blockchain community going, and I was there a couple weeks ago and would love to be back there soon.
Well, come back, my friend. I'm more than happy to have you, and let's have a good time for sure. So, this has been a great conversation. I really appreciate you coming on and sharing your story and the incredible insights. I think that if there's anyone interested in learning more about your organization or just the industry in general, this is what these kind of conversations are about, is maybe opening your eyes to something that's just not so, out in the open, right? We have a lot of things when it comes to blockchain, crypto, Web3, and the mainstream media, and it's really great just to have these different kind of conversations and explore other real world use cases and just really expand on the true utility of this technology. I'm truly fascinated, and having conversations like this with you, Marc, just makes me more bullish overall on everything about the industry and where you are going, and really excited to see this journey progress. So, folks, thank you so much for coming. Lourdes, we have Mike, Alexandra, Nadeem, Patrick, Tolling, Michaela, Al, Charbel, Jack, Corinne, Jimmy, Richard, Ubong, Patrice, Rahan, Zachary, Scott, a good friend Scott there, and we got some other people coming in. I appreciate all of you. Thank you so much. This has been a great conversation. I really enjoy doing this. It's very much therapeutic for me to have conversations with all of you today, and you could be a million places in the world, but you chose to be here, so thank you for that. And we will be back on Monday for another episode of Just Chilling at noon Eastern time zone for a conversation with a awesome person from the Solana Foundation. So stay tuned for that. And also, too, folks, if you don't know, we have great content on our YouTube channel. So make sure to check out our YouTube channel and to hit that notification bell on all of our pages for all of our employees, so you can always stay up to date with the cool stuff that we're providing for you also. Thank you again. Stay safe. Take care and have a great weekend. Bye, y'all.
Thank you.